Hey guys, what's up? So in this video, I'm going to be showing you guys how to properly identify Forex trends in the market. This is the part 2 of the 3-part series I previously talked about. In the part 1, we talked about how to analyze the Forex markets. Now this is the part 2, which is how to identify trends in the Forex market. In case you're new to the channel, I'm Ifes the Great, welcome to the channel. And if you're a returning subscriber, thank you all for all of your support in my previous videos. Without any further ado, let's get straight into the charts. So guys, welcome back to the charts. Now, these are basically the 3 types of trends that we have in the Forex markets. We have on the left side here, we have the ranging markets, which includes a series of equal highs and equal lows. The markets range from a point of resistance to a point of support, point of resistance to a point of support. It just bounces up and down in a range. That's why it's called a ranging market or a sideways market. Next up, we had a downtrend, which consisted of a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. This is more of a downward move. A downtrend simply is a downward move of the market when the market is selling. And from this point on, we had an uptrend, which consisted of a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, leading to the upside. So these are basically the 3 types of trends that we have in the markets, and I hope with this illustration of the arrows that I use the arrows to indicate their direction. For the ranging market is always sideways, for the downtrend is always downwards, and then for the uptrend over here is always upward. So now, in case you're planning to trade the ranging markets or the sideways markets, I'm going to zoom in on this now so you guys can see it clearly. I'll zoom in on this. So we're focusing on the ranging markets now. The ranging market simply consists of a series of equal highs, or we can call them a series of resistance and support. It's a sideways market, so it moves from a point of resistance, it sells from a point of resistance, and buys from a point of support. So if you're planning to trade the ranging markets, you have to sell at the point of resistance. So we can see all these zones here, these levels. This is what I call the resistance zone. That's the roof. The resistance zones act like a roof whereby price mitigates or price gets to and bounce from that place. It's a roof that pushes price back down from a point of interest. So this is how to trade the ranging markets. You sell at various resistance. Like right here, you could have entered a sell here. Right here, you could have entered another sell. Right here, you could have entered another sell here, and you would have gotten your profits at the support. If you want to trade buy on the ranging market, you have to always buy at a point of support. So we can see this was our first support zone being formed here. We could have bought from here. You could have caught a nice trade here. You could have caught a nice buy here. Another nice buy right here. Same thing happened here. You could have caught sells on this side. You could have also caught sells on this side. So ranging market is basically a sideways market whereby you can catch either buyers or sellers. It is very easy to trade, not really too complex of trading, but you just have to make your stop loss big enough so that it accommodates for situations like this. As you can see in this situation, it's kind of wicked above our point of resistance, but at the end of the day, it's still traded below the resistance and it's sold. The easiest way to trade downtrends is that when price has broken a low, you have to sell from the point in which the low, you have to be selling from the low in which price previously broke, to create a greater low. Now let me show you how to enter this if you are interested in trading a downtrend. Now, so first off, we saw price breaking its low quite easily. We saw it was trying to react from the low, or with all of these candles here, but it failed to react from it. Then it broke the low and formed a new lower low right here. So I'm going to be labeling this thing so that you guys can understand it better. So guys, what I basically did here was to label the lower lows and the lower highs so that you guys can see it properly. So here we had, remember this was our original high, then we had a new lower low, then a lower high, a lower low, a lower high. That's LH is lower high, LL is lower low. And it's very easy to understand things like that. This was our last lower low here. Now, I want to explain the entry rules for a downtrend. This is how we know that we have to sell for a downtrend, good and fine. So how do we sell for a downtrend? Now, price created a new lower low. Then you remember that this was our last support that was formed here. Then you saw price, since price was able to break through the support. So our previous support will now turn resistance. I've talked about resistance and support and psychological levels and price levels in our last video. So you should know that wherever price had a reaction like this, so this was a very good reaction of price at this zone. We saw the intention of buyers in this zone. It was very clear. It was a very good reaction. There were accumulated orders here before price finally bought. And now, since price is able to break through that zone, we know that there are going to be sellers interested in selling at the previous buyer's zone. You understand? So that's what basically supports turn resistance means. Now, since price has created a new lower low here, it was going to form a new lower high. Now, when price got into this our zone of previous support turn resistance, now this is the best form of entry if you want to actually enter resistance and support. So I'm going to explain the form of entry, the mode of entry that everyone should know. And it's a very clean and a very sure way of entering. When price gets to our zone of previous support, I'm not supposed to be teaching this now, but I think it's best to explain the mode of entry. Remember that, guys, always make 1 hour time frame your lowest time frame. You don't want to go below it. So I'm going to explain a lot of things here now. I'm going to explain a lot of things, and you're going to see how price reacts from zones. So we saw that price got into our zone of previous support. Now I'm going to change this thing now to line chart. So I want you guys to see some things. I'll change this to line charts. You see, to become clear on line charts, price formed a form of support on this zone. Remember that we are inside our support and resistance zone now. Price formed a form of support on this zone. Then you saw it went up. Then what happened afterwards? Price broke through that support zone that we had. Then you saw it retrace back. The support zone now turned resistance. You can see it right here. Because I'm already accustomed to trading all the support and resistance zones, I could already pick it up from normal candlesticks. But if you can't pick it up from normal candlesticks, you can always pick it up from line charts. So this was the previous support that formed, the last support that formed when price got into our zone. It finally broke through it. That means now this our previous support zone was going to turn resistance, and what the price came back, mitigated it as resistance, then it sold off. Then we can see the sell in price. So it's as easy as that. Just what is almost the same thing with what happened on the bigger time frame. So let me show you guys the bigger time frame, the example in the bigger time frame. We saw that this was our previous support. Now price has broke the previous support. Then what happened? It turned to resistance. The same thing that happened on the big time frame, on the bigger move, is what's happening inside here now. And that's a very good indication for you to know, okay, this is now time to sell. So if I was going to enter this trade, obviously my entry would have been here. Then let me go back to candlesticks. Then my stops was going to be above here. I would have made it like a 20 pip stop loss, which is very nice, I guess. I would have made it 20 pip stop loss. Then you will not ask, where would my take profit be? Well, my take profit now is going to be on this new lower low, this lower low that was created here. So we know for a downtrend that price is literally going to come back to the new lower low to create a new lower low. So from our lower high point, we're going to come back to create a new lower low, and that's exactly what happened here. So with this, you can see we already had a successful 3RR trade. I'm already getting into trading, but just know that we could have sold from this zone here, and our tip would have been here and would have made our 3RR very easily. We can also see the same thing happening here. So remember, this was our previous form of, let's just call it our new form of support here. We saw that price broke through that support. Then what happened? So after price broke through the support like this, the same thing also happened there. We saw price retraced back into, this is our mini zones. Now this is now our major zones. Remember, this is our major lower high here, and our major lower low here. But we saw price broke through this new support that was formed, because we see price reactions from here. And after it broke through it right here, so I'm going to draw it for you guys. So this was the support formed, then price came, it broke through the support, then it came back. The previous support again acted as resistance for price to sell more to the downside. So this is basically a repeating pattern in the markets, which also indicates, is also a repeating trend pattern in the markets. It's also a repeating downtrend pattern in the markets, and it occurs frequently. So for this trade now, let's see if we could have had an entry in here, because it's very easy to trade all this. So I'm going to draw my point of support right here. Now, as soon as price broke through this previous support, remember, once price has entered our support zone back, we have to find support and resistance zone next to enter from. Now, why I marked out this as our support zone is because when you convert this to line chart, you're going to be able to see that truly it was a support zone. It was the last support zone formed. So it was basically the last support zone formed before price entered into our previous zone of support, which is turning resistance now. So once price is able to break, remember what I said before, guys, once price is able to break below this low now, it has indicated that yes, price is indeed ready to go down to the downside. So in this place now, I'm not sure we'll be able to see it, but I think there was still reaction from this zone. So I'm going to go back to candlesticks. Going back to candlesticks now, we saw price broke through. We saw at this point now, so I'm going to make it full screen. At this point now, price broke through our zone. Then we saw the pullback right here, our slight mitigation. Our stop loss would have been above here. I think it's going to also be 20 pips stop loss, because I always like to give space for spreads in my stop losses. So we would have had the 20 pips stop loss right here, as easy as that. Then we would have also targeted these lows, since we know we are going to the downside. So we would have targeted these lows. This was a 1 to 3 RR trade. So this is the new lows that we're supposed to be targeting, because remember, guys, for the downtrend, a series of lower lows and lower highs, it just goes all the way to it just keeps on going to the downside. So this was a 1 to 3 R trade, 1 to 3.6 R trade. I wouldn't have taken that trade, but yeah, I guess some people trade 1 hour trades or something like that. Personally, I wouldn't have taken that trade. Remember, guys, the same thing always happens with the market. The market repeats its cycle always. So we had a form of previous support here with this new lower high created. Once this support was broken, what the price always do, price will always come back to that zone and sell. I always repeat this. I'm repeating this, that the previous support and resistance zones are very, very easy to trade. Very easy to trade, very easy to understand. The same thing happened again. We have always talked about break and retest, break and retest. Now we had the break and retest here too. We had the break of this support right here. This was the break of the support here. Then we had the retracement back to the previous support zones to act as resistance, even though this one had failed, this one did not. Then after it came back to the zone, we saw it sell to the downside. So if we wanted to enter a final sell position here, I'm going to mark it out for you guys now. So remember what I always say, guys, we go to the line chart. And go to the line chart, we can see that when price entered this previous support zone, now turn resistance, this was our last form of, I'm going to draw it now, this was our last form of support. This was our last form of support, because if you can look on the left side of the support, we have like strong support zones here. We had this first bounce and second bounce, so this already made this point a point of support. So we're waiting for price. Once price has gotten to our previous point of overall support, we're waiting for price to just, once price is able to break through the point of previous support, then we can enter. That's going to be our confirmation that okay, yes, this thing is finally ready to sell. So it broke through it at this point. Then if I was about to enter this trade, which I would have entered because it was more of double confirmation, we had the trend on the higher time frame, and we had confirmation now on the lower time frame. So we would have entered with I think a 30 pip stop loss would have been good here. So a 30 pip stop loss right there would have entered. This was our form of support, remember. Then when price retraces back to our form of support, we'll still enter into the zone, into the trade. It's not too complex. Our stops was going to be at this high, a safe high. Then our take profit, remember, guys, we're targeting this overall lower low because we are in a downtrend and we're expecting price, after creating a new lower high right here, we're expecting price to break through and create a new lower low. So my take profit on this trade would have been somewhere here. This is a 1.5 trade, 1.5 RR trade. Personally, I would have taken this trade because anything above 1.5 R is valid trade. I've taken this, and that is how easy, and that is how understandable, and that is how much the market can shoot to you, because the market is just consists of a series of lower highs, lower lows, support, resistance, trends. As long as you're able to identify the trend, as long as you're able to follow support and resistance patterns that forms up in the market, different things like that. As long as you're able to take note of all of those things, then you should know that the market will always respect your trade, your market will always respect your setups. Now for the uptrend, which is going to be the last part of this video, I'm going to be fast about it. The uptrend consists of a series of higher lows and higher highs, higher lows and higher highs. So I've labeled it here so you guys can see it. So this was our initial high, which was our higher low, created a new higher high, higher low, higher high, higher low here, higher high, higher low and higher high right there. So for the uptrend now, remember for the downtrend, our previous form of support were acting as resistance. The reverse is the case, and the opposite is the case for the uptrend. Our previous form of resistance now was going to be acting as a form of support, and so on and so forth. So this was our previous form of resistance right here. It broke through it and acted as a form of support. Our previous form of resistance right here, it broke through it finally here and acted as a form of support. Our previous form of resistance here, it broke through it and acted as a form of support right here. And that is how uptrend works. Now to explain this better, we saw this was our last high that caused our last high for the downtrend, our last mini high, because I wouldn't classify this as a lower high. Let's just say it was our last high of this downtrend. Now price was able to break through the last high of the downtrend. That means the trend has now shifted from a downtrend to an uptrend. So for the smart money concept traders, SMC traders, they like to call this particular move change of character. So it doesn't necessarily matter what you call it, but they basically call it the change of character. They call it the change of character. So the change of character simply identifies that price has moved from a downtrend now to an uptrend. So once the price has given us a change of character, we expect that price will continue to move to the upside, creating a series of higher highs and higher lows. The only way that would be valid is if price is unable to break below here again. So once price is not able to break below this low right now, we know that price is going to continue a series of higher highs and higher lows, that the trend has now changed character. The character changed from the downtrend to an uptrend. That's what's called the change of character. We saw price shift from previous form of resistance to a form of support here. So price broke through at this zone, reacted to it, our previous resistance right here turned support, and price reacted from it and bought to the upside, up to all the way to a psychological market level that we had right here. Remember guys, for the psychological levels, these lines that we see on the chart right now, I've already explained it on my first part of this video, the first part of this series. I'll put a card above there so you guys can see it in case you guys have not watched the first part. So these lines you see on the charts that I have marked up right here, H1, H4, they are all explained in the first part of the video, so you guys to make sure you go check that out. So now this was our new higher low. We are expecting a new higher high, obviously. So if we were to enter this trade, remember guys, this was our previous resistance. So once price has retraced, or once price has done all its necessary retracements, so I'm going to delete this, sorry. So once price has done all its necessary retracements, after the break change of character, we know that trend has shifted from the downtrend to uptrend. So we'll wait for price to come down here. Price didn't give us any form of resistance to trade off from here. We'll wait. So price retrace. As long as price is not able to break this low, then our trend is still uptrend. It has changed fully. If price was able to break out this low, then we would have a new change of character right here to the downside, which is indicating that okay, the sellers are still in control of the market. But if price isn't able to break below this low, we know that buyers are now in control of the market. So what happened here? Price retraced all the way down here. It retraced for sales. Then we know that we have changed character here, so we're expecting buys to the upside to take out this high. So we would wait for price to actually get back into this previous form of resistance zone. So I'm going to mark it and I'm going to show you how you could have entered the market right there. And you would have entered the market easily right there. So as usual guys, we're going to go to line chart, and on line chart we can see this was the last resistance formed. This was our last resistance formed when price entered our zone of previous resistance right here. So this was our last form of resistance form. So we just want price to take out the resistance, which price did at this point. You guys can see that. So the resistance form, then price wasn't able to break on this side, was bouncing. Then price finally broke through it, and as usual guys, remember when price is able to break through the resistance, break and close above the resistance, then we are expecting the resistance to act as a form of support. So if I wanted to enter this trade right now, I would have entered right here. Let me change back that to line. So I'll enter right here on the pullback of the candle. Then my stop loss is always going to be below here, but I'm going to on candlesticks to say the wick. You always have to your stop loss below the wick. So I would have put my stop loss right below here. So this was a 29 pip trade. I'm just going to make it a whole number, a round number. That's what I like. So my stop loss would have been there. Then my take profit, since we know we are targeting these highs to create a new higher high, I would have placed my first take profit should be the year, which was a 1 to 5 hour trade, not a bad trade honestly. Then the second take profit, as usual, since we already marked out psychological levels, if we're going to trade on psychological levels, that's for swing traders, we would have extended our second take profit to this second psychological level, which was the 0.60550. We've talked about the psychological levels, remember guys, in the first part of this video, first part of the series. So in case you guys want to see psychological or understand psychological levels, you can go to the first part of the video and understand it clearly. So we would have put our second take profit there for a 4-hour trade, which actually hit, and that was a very nice setup. So this was going to be our first trade, our first buy trade in this market, if our first clean buy trade in the market. Now what happened again? We saw price broke our previous highs, creating new higher high. Price came back down to our previous form of resistance again, just the way price used to come back to resistance. So they came back to our form of resistance right here. The resistance formed support and a new higher low. So if we were to trade this, as usual guys, remember, always go to the line charts. I'm also showing you guys how to actually take trades now, in case you guys want to know how to enter the market, the best form of entry. So we had our clean zone formed here. This was our last resistance zone before price entered into our previous high, our previous resistance now acting as support. So this was our previous high. We will just wait for price to always break through the highs, and once price is able to break through the highs, we know that price is likely to retest those highs. So now this is the break up. The break happened right here. After the break, we saw the retracement and the retest of the candles. We saw the retracement happened on this side. This was where the retracement finally happened. It was nice. The retracement happened right here. This was the retracement. As usual, our low is going to be the lows of this candle, which at this point we are using a 12 pip stop loss. Then we would have always targeted. Remember guys, we're going to target the previous higher high. Since we know we're going to the upside, so we're going to be creating a series of higher highs and higher lows. So our TP on this trade would have been on this high right here. Let me drag it. So on this high right here, this is already a 4-hour trade, and I literally showed you guys the same form of entry, the same mode of entry always, and it always works. The same mode of support and resistance entry, it always works. Since you see why this mode of entry will always work is because we are trading with the trend. We understand where the market is heading to. We understand that the market has shifted from a downtrend, has a change of character, to an uptrend. We understand that price is now trading. Price entered into our previous zone of resistance, which is turning support now. We understood that we had to wait for price to break through the last resistance zone that actually entered the support zone, our previous resistance zone. We had to wait for price to break through and retest, give us a nice retest there to buy to the upside. And we also knew for the last that price was heading towards these previous higher highs, because for an uptrend, price creates a series of new higher highs and new higher lows, new higher highs and new higher lows. And with that, we would have caught this nice 4.6 hour trade, which was very easy. Price broke through our last higher high, from a new higher high right here. It came back to our zone, but sadly for us, it didn't give us any confirmations here. I'm going to show you guys. You guys can going to see it, that price truly didn't give confirmation. I remember guys, if you don't have a confirmation, do not enter a trade. So price didn't give it any confirmation here. It went to the downs, it retraced a lot, but we saw that price was able to take out this higher low, which is a good sign for us to know that yes, the uptrend still stands. So we were going to wait for price to come back to our previous sum of higher highs, which was this zone, this level here. So once price was able to come back to this level, what do we see? Remember guys, when price enters our level, we go to the line charts immediately. We have to change the line chart so that the market becomes clear. So we see that this was our last form of resistance that was formed when price entered our zone right there, because the resistance zone is actually very clear. You can see that price entered into our zone of previous higher highs, then it sold a bit, it entered again. We're waiting for the break to the upside, because we are not selling now, we are buying. So we want resistance to be formed, we want the resistance to be broken, and we want the retracement to come back to the zone of resistance and support before we can buy. So now that we have identified our resistance zone, which is just two highs here, because we saw price reacting from there before, then price finally broke through the resistance zone. We'll change that back to candles now to see whether we had any form of entry here. So guys, you always note that it must not necessarily give you the entry you're looking for, but at the end of the day, it depends on what you see, or how you want to enter. So at this point, if you're a person that, because I know people that you can trade with from the close of the candle to the wick of the candle. So if you want to make your entry more sure, more reliable, you can actually trade like this. So trading this way would have given you an opportunity right here. It will have given you an opportunity for entry. If you had entered off the wick right here, you could have entered the trade right here. Then remember guys, your stop loss is always going to be the low that caused the break of the highs. So this is our stop loss. It will have been in a 20 pip stop loss trade here. Then going to the upside, we know that we are targeting this new higher highs that was formed right here. We knew we're targeting it, so we would have put our take profit right on this higher high, which is right here, price level here. And this already gave us a 1.9 hour trade. Not a bad trade, honestly, but in case you guys didn't get that zone, in case you guys weren't because we've not been using the rectangle, we've always been using the line. So in case our trade wasn't activated yet, because we could have put our entry, our limit orders here and our stop loss below here, and we saw that the trade never got activated, it's fine. You are not going to catch every trade in the market, obviously. So I'm not going to tell you guys that, oh, it's always going to be perfect for you guys or something like that. So we let's say we missed out on this trade. Now what can we see that happened again? Remember guys, we're still in our zone, so we'll go back to the line chart. We saw price, another reaction for price here, another form of resistance formed after price entered back into our zone. You see price broke through the previous resistance, previous higher high zones, which is this. Then now price entered back into the zone. Now this is the last form of resistance that formed before price, that led price back into the zone. Remember guys, we're chasing a higher high level here, so this was the last resistance that formed. Once this resistance is able to be broken, we are expecting a retracement to form our support before entering for our buys to the upside. So what can we see that happen? Let's go to candlesticks. We've marked out the resistance zone, and very, very beautifully we saw, so this was our new high created. So I'm going to delete this. After price broke through this, this was the last resistance. It created a mini new higher high right here, which I'm not going to mark because it doesn't really count as an overall higher high, but yeah, on the lower time frame it does count as a lower higher high, as a normal higher high. Then price came back down, acting using our form of previous resistance as support, which price always does. I always tell you, this thing's repeating the market every time. Then we would have placed our lows just below here, which is going to be our 25 pip stop loss trade. Then typically our TP1 would always be the high, the retracement high, which was the 1.6 RR, but since we already have our psychological level marked out here, we would have aimed higher right here, and we saw that was a 2 RR trade, and price actually hits the TP very nicely, forming a new and the last higher high of this trend. Now that will be the end of today's video. If you ended up enjoying today's videos and you were able to gain valuable knowledge from the videos, don't forget to hit the like button, also subscribe to the channel and hit the bell icon to turn on post notifications, so that whenever I upload any other video, the part 3 of this series, you're going to be notified and going to be made aware of it. If you want to reach out to me and show me what you have understood so far in my videos, and you want to give me your chart breakdowns, or you want my advice or my insights on the markets, always reach out to me on my Instagram at IFSTheGreat. I'll be posting the handle right there. Also, I'll be posting the page on the screen right now, so you guys can know my exact page and not other people's page. Know my page, follow my page, message me to show me how far you've come, how far you've understood my videos, and I would hopefully reply to every one of you as long as you're following me, as long as you're a subscriber. I'm very much going to reply to your messages. With that being said, I want to see you guys in the next part of this series, which is going to be the part 3, and I'll be talking about supply and demand. If you don't want to miss out on that video, make sure you subscribe, turn on post notifications so that you'll be notified when I upload those videos. I hope you all have a lovely, a safe and an amazing day. Goodbye, everybody.